Welcome back to my final daily report market analysis video with me, Richard Perry, market analyst at Hantec on Friday, 25th of September. Moving on to this gold chart, which in line with all these other dollar plays that we've been looking at today, the dollar had a bit of a slip back this morning overnight, and then it's now started to regain the initiative, and subsequently gold ticked a little bit higher in the past 24 hours, but then has seemingly started to roll back again. What I've done actually is I've now sort of looked back and I've drawn in this uptrend that you can actually link from the April low, the June low, all the way to currently this low here in September. Now, an uptrend needs 3 points of contact and proper support coming in. Now that is obviously the third point of contact, and it hasn't yet obviously formed the support yet. It's just consolidating around here. So if it started to tick higher, you'd say that is an uptrend. But if it breaches to the downside, you'd have to get rid of that as a trend line. And it's an interesting moment because obviously what we have seen is a bit of a consolidation. It's allowed a little easing of the selling pressure, but essentially we still think that this selling pressure is going to resume in due course. Now, as I said, the easing of the selling pressure has broken this little mini downtrend of the past 3 or 4 sessions. Momentum indicators have unwound, but to levels where the RSI on the hourly chart has consistently failed since the selling pressure has taken off. So around 60 on that RSI on the hourly. And is this the point at which the MACD lines have unwound to neutral and then start to fall over? Already we're starting to see the stochastics faltering a bit. So this is an important moment for this rally. A breach back down and sort of closing once more below 1863, I think really does sort of suggest that the market is starting to tail off again. 1847, 1848 was the low yesterday. Obviously that's initial support. But I believe that having now broken well clear of 23.6% fib to the downside, that opens 38.2% fib, which is 1835. So that is your next sort of near-term target area, I believe. 1818 is this old breakout high from July and the first real price support as well. So if you do lose 1848, you could quickly be at 1818 again. Now, in terms of technical rallies, you've got overhead supply, 1902 to 1926, I would say. Anything sort of faltering underneath that really does put the pressure onto the downside once more. You can see the overhead supply building up now on the hourly chart, 1882, 1894, and then around that sort of 1906, 1920 level. So they are building overhead resistance areas, and yeah, again, if you even fail under 1876, which was yesterday's high, yeah, the pressure builds once more to the downside. So I'm expecting further downside in due course. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars and click to watch Trader Talks, our videos that give you top trading ideas.